Am I live? Are we on? All right. And away we go. How are you guys doing? Good Sunday evening to you all. And I've seen you guys already lively in the chat. Dude, I love it. Very nice to be here with you guys and hang out. Got a fun one here. I'm going to talk about, well, it may be fun if you're on the sidelines, but if you're underwater on this or upside down, it might not be, might not be. Slow it down, brain. We can do it. Might not be that fun if you are in this and you are investing. And I got to shout you out, man. Puckman 1035, you recognize the Mr. Yuck sticker, tells me you are a child of the 80s or you've time traveled back to the 80s and you know what the Mr. Yuck sticker is. It was, I think, the national poison control when I was a kid, used to scare the bejesus out of all of us. And my grandma would put it on all the stickers when I was a little kid. So I always remember Mr. Yuck. What a fun thing to do. Anyway, so I thank you guys for, and I'm in all honesty, thank you for coming by and spending a little bit of your time. Great to see John, Gary, G-Man Gary, and who else? We got Rick, Fast Eddie, Shamir, you're always here. My buddy Jeremy, Dividend Stockpile. So we're going to get started. Darth Dividend. Hey, Darth, this one might be right up your alley. So just a word of the wise, as I'm sharing this information on StreamYard here, I cannot see the comments. So if you're typing to me in the comments while I'm off and away and sharing my screen, I'll have to get to it when we're done. So we're going to go ahead and share it with you guys here. Which stock just got the dividend downgrade? And it was none other than Medical Properties Trust, ticker MPW. And let me do this. That's no bueno. That's what we need to do. Okay, that's going to be more bueno. More bueno, más bueno for you to see. So Medical Properties Trust, this is a really interesting one. You guys know I did the video on it before. They just had their earnings, and I'll kind of slowly scroll through this as I read from my notes. But the thing with them is they're blurring the distinction and the line between landlord and operator because they just dumped another $140 million in a new loan to Steward, which is one of their top revenue sources. That's one of their tenants. And they already have MPW, Medical Properties Trust, already has a 10% equity stake that's direct ownership in one of their tenants in Steward. They're clearly struggling because from what I read, the conventional banks turned down additional loans, additional funding to Steward. So a third-party investor group invited Medical Properties Trust in to basically provide credit up to $140 million. Management on the call said expect it that the whole thing will be tapped. And it's interesting, though, because it's backed by first lien patient receivables. Now, if you don't know what that is, don't worry, because I didn't know what it was. I had to do a bit of looking up. The first lien patient receivables are essentially unpaid patient bills. So Steward, they are responsible for 20% of Medical Properties revenue. So their tenants, that the hospitals they own, obviously the patients are paying bills. So if they were to default on the loan, then Medical Properties Trust is first in line to collect on the bills that the patients owe. But it's just, it's not a good situation from what I can tell. Secondly, after a convertible loan hit, Medical Properties Trust now has $655 million invested in Prospect, which is another one of their tenants. And I'll go through this a little bit here as I scroll down. You can pause the video if you're watching on replay or whatever. But Medical Properties Trust, in one of their other largest tenants, they have a 49% ownership in Prospect's managed care. So they're increasing their equity stake in two of their tenants, which just doesn't feel right to me that they are investing in the property. So they're investing, but then they're going to get some of that money back, which is definitely muddying the waters. Medical Properties Trust keeps selling assets off, and what they're doing with that is apparently not paying debt because they have a high debt leverage, 8.5 times their EBITDA. And I think that number is here in the article. So they have really high debt that they're not paying down. They have $1.4 billion of loans that are going to be maturing in early 2025. Okay. So they kind of got to tread water till then. But it's fixed debt at 2.5%. And the theory goes, as they tell in this article here, as we'll get down to it, is that if they were to refinance, they're not going to get 2.5%. If they did it at 8%, which we see down here, it would be approximately about $75 million, or about 10% of their adjusted funds from operations. And AFFO, if you don't know that number, from what I understand, it's just stripping out all the things that it costs to upkeep and the investments that you have to make in the property. It's a little bit more of a cleaner number of kind of the earnings, the free cash flow number, if you will, for a REIT. And a couple more things to let you know here is that this one was crazy. So they have another tenant that is struggling, and they couldn't pay them cash for the rent. So this tenant instead gave them equity stake in the business instead of rent. And Medical Properties Trust claimed that is in their funds from they claimed that as cash flow in their AFA or in their funds from operations. So in a nutshell, that sounds crazy to me that the tenant couldn't pay them cash, so they gave them a share of the business essentially, and MPW has claimed that as cash flow. I don't know how that's legal, but maybe somebody watching knows. Also, let me show you this management in their stock compensation. Now, I'm an amateur at this, amateur sleuth. I'd love it if somebody's watching. I don't know if Casey's showed up and she knows, but their stock-based compensation. So we want to go to the balance sheet here. And yeah, okay, on an annual basis, we're going to look for their, where are you? I think I passed it. I'm in the wrong one, aren't I? Now I need to go to the cash flow. We're looking for the stock comp, and there it is. Hey, I was at Ghost. I got 4 hours of sleep yesterday. Daddy drank a little bit too much, so I'm a little bit slow today. But here we go. Stock-based compensation. The trailing 12-month number right here. Management has received almost $46 million in the last 12 months. Dude, the stock is down 67%, and they're getting almost $46 million in stock comp. So I think that's contractual, and you can see it's kind of come down a little bit. In the past years, it was 47 million, 52. And I guess if that is kind of a saving grace, if we switch to quarterly and look at the stock-based comp, it is, I just passed it, right? Like, you passed it. It's 6.4 million the last quarter. So it has come down. It was 16.4, 11.8. And I don't know if that's contractual and if the board can go ahead and suspend that or whittle that down or do what, but at least it is a little bit lower than it normally is. And just overall, you want to know, why are they not repurchasing debt? Why are they not? They have 2 bonds that are out there that they could be buying back. And why are they doing that? Why are they putting more funding into struggling tenants, taking bigger ownership stakes in their tenants that are supposed to be paying them rent as the landlord? There's allegations, if you remember, from Viceroy. They, I think, called it round tripping revenue, where they were saying that they were doing a sale leaseback type thing where they buy the property from the future tenant. And then, like Realty Income did with Wynn, Boston Harbor, they bought the casino, they bought the property, and then they leased it to them over a, I think, 20-year, was it 15 or 20-year term? So they're going to get that back. But either way, there's all these allegations that Medical Property Trust has way overpaid for the property, like by a lot of money, meaning that they're essentially overpaying and making sure that the future tenant is flush with cash to be able to keep paying them the rent, so they can show that they have rent coming in and a high occupancy rate. So, and then that's just one of the last things here they're going to see. You might be able to read on the screen is that the dividend cut, they think if it goes down to 10%, it's at almost 15% now. If it went down to 10%, that would free up about $175 million, which they could use to improve the balance sheet, start getting that debt down. And management said in the call that everything is on the table. Their CEO, whose name escapes me at the moment, but he said everything's on the table. They're going to talk to the board. And sorry, I probably shouldn't have went so fast on this, but there you go. So they give you a couple. This is Simply Safe Dividends, by the way. They said if you wanted yields near 10%, you could look at Ares Capital, ticker ARCC, and Sixth Street Specialty Lending, TSLX. So with that, everybody, I'm done. So I want to know, do you think investing in MPW is like gambling? Do you think that it is highly risky? I know it's a pretty polarizing stock. And if Darth is still here, I'd love to know what you're doing. I think you said it's not a big major position for you, right? But guys, it's crazy looking at this. And I had kind of forgot about it until I saw the Simply Safe news there that they downgraded them to unsafe 20. I was like, oh yeah, what's going on with them? So, spent a few hours looking back into MPW and I was like, man, it just seems like this is not a well-run business. And there's allegations of like outright fraud and Ponzi scheme are some of the words I've seen thrown around. Could be a little strong, but man, it's going to be an interesting one to watch. So do any of you guys invest in MPW? And all right, I'm going to be caught up with you guys because why? I love you. I want to be with you. I don't want to be living in the past. I want to be here in the now. So yes, just by the way, if you just wandered on in, hello to everybody. You can go back. We talked about the dividend emotion was from Simply Safe Dividends on Medical Properties Trust, ticker MPW. And I wonder, do you guys think that a lot of the likely I didn't even show you the AFFO payout ratio. I needed to do that. I needed to. So I'm going to do that. And then I'll jump back in with all you fine and lovely human beings out there. So some numbers on Medical Properties Trust. Give it a little bit of context, right? Come on. There you go. So currently dividend yield 14.36%. And there has been a few red flags here. And in there, they started downgrading them 60, 50, 40, and now they're down to 20. But the interesting thing, so they got, 4% slow dividend growth. Yeah, it's a high yield, but hey, 67% down on the share price. Doesn't really matter what that dividend yield or growth is if you're losing that. If we are right now is the ground floor, you could be getting in cheap, but they have a 10-year dividend growth streak. And you see they missed 1, 2, 3, 4. There are 2 dividend payments in now without giving a raise. So that right there shows me that there's a lot of smoke there, and a cut is likely coming. Now, just because the dividend's frozen doesn't mean that a cut is automatically on the table, but you can see right here that their dividend yield is 153% above the 5-year average. So way above there. Obviously, this is almost, remember, the AFFO is kind of like earnings per share number, our free cash flow, and they're way below the average. And yeah, they had been as high as 6. Oh, Siri, stop it. You guys scared. Whew. I was like, somebody's in the house with me. All right. Go away, Siri. So, I'd probably just turn somebody's. Anyway, what did I want?
Trouble with the connection. Please try again later.
Good night, Siri. So, what was I saying before she so rudely interrupted me? Yes, we don't look at free cash flow payout ratio for REITs, and they explain it there. Their AFFO payout ratio is at 99% projected in the next 12 months because of their diminished AFFO. $1.17 a share. The dividend is $1.16. Razor thin. That's what they're projecting over the next 12 months. And these numbers, the sales growth you can see has just been, it's a negative 11%. They're selling businesses. They're selling property. I think this company's a mess. And yeah, they're not buying back shares, even though I think they have an authorization to do so. And I think that is the last thing. Yeah, their operating margin just took a big hit. Yeah, that net debt to EBITDA 8 point. It's too high. Everything is just too high with this company and not doing well. So, oh yeah, dude, Darth, congrats on the graduation, as Gorilla Nurse just shared. So I'd love to know what you guys think. Share it with me. Hit me with it. Tell me what you want to talk about, if not this. And yeah, dude, we've got a dividend. We got a lot in the dude. I love seeing you guys here. Kevin, we've got Kevin Burgess. We've got my buddy Darth Dividend out there in Ohio. Ohio. All right, let's see what we got from you guys. Oh, he's going to go to bed. Yeah. Nice. Active with me. Sweet, dude. Well, sweet dreams, buddy. We hope you don't let the bed bugs bite. That's how that saying goes, I think. Let's see. I don't want to say that anymore. That's my stalling tactic for my brain to just spit out. Yeah, MPW, good one. I honestly, again, I don't hold a position. I have never outright invested in them. And if I do hold anything in them, it's through a mutual fund, but I'm not aware off the top of my head. And yeah, you could take a tax loss harvest on them if they are inside of a taxable account. Interesting, then, yeah, looking at the yield. If they do cut that dividend, I think a lot of it is priced in, but who knows? I mean, if they cut in the next 2 or 3 months, it could fall another 10 or 15%. Let's see. Oh, look at that. Have Adam Newman and John Stanky on the MPW board. Yeah, I don't know who's on their board. I know, John, that's interesting because there's a lot of articles. I did a lot of digging and reading articles and going through things. And there's a lot that also have strong buys and a lot that are strong sells. But you know, the fun thing with that is they can give the disclaimer at the end, but always remember that there are always going to be way more potential buyers than sellers. So if you say sell MPW, the only people that applies to are the holders of MPW stock. And with 599 million shares outstanding, there's, well, potentially everybody that has an investment account is a potential buyer. So there's way more potential buyers and people to come in. So always be careful, do your own due diligence and research. And you'd rather invest in crypto, Shamir. I don't know if that's a bad thing. Oh, that's interesting. Yeah, MPW reading my guy Puckman, TSLX. I don't know TSLX. I haven't looked into them. Sixth Street. So that's really interesting. Yeah, and their credit rating, I think MPW is BB, which is not very good. And I think there's a thing that if they start buying back shares, then that could affect the rating of the. I don't remember. Like I said, it's I did a lot of reading. I was all over the place with it. Yeah, nonsense MPOs. Well, that's interesting, Jeff. And again, I hope everybody in it will truly make money. I'm not trying to throw shade and just say this is, but it's just from what I'm seeing. Like I said, I'm on the sidelines. I'm trying to be an impartial observer. And from what I see is just a ton of red flags. And it is just, yeah. But again, that 90% occupancy, you have to look at it and think, if they're funding their tenants and they're giving them loans and giving them money so they can make payments back to MPW, you know what I mean? It's like, it's just so weird. If I'm a landlord and I have a tenant and I'm giving them cash infusion so they can be able to pay my rent, isn't that just like funneling money right to myself in a diminishing pattern? Downward diminishing spiral. I was in a band once called Downward Diminishing Spiral. We were a Tool tribute band. That is a complete fabrication. I was not in a band called Diminishing Downward, whatever I called it, Spiral, I think. Let's see. I did it. You see? It's too bad since one would think medical buildings, they are, but exactly, man. If they're a badly run company or poorly run, then it's not going to matter. And it is high risk, high reward. 110 shares. That's going to be interesting, Mark. Hey, by the way, I don't believe we've spoken before, Mark. So it's nice to see you. I'll drink a little wow out of that. But yeah, certainly you are 100% correct that a dividend cut has been priced in, but now it's going to be how much is the cut? And if they were to do something drastic like suspend it so they can really try to start getting that leverage down, then I don't know, man. It might go sub $5, but we don't know. Oh, I think I forgot this. You asked me about this before, didn't you? And I never did it. I never talked about BDVG. I'm going to write it down here. I'm making myself a note. BDVG. We got the note written. I've never looked into it. You know what, man? Because you're so kind to stop by, I will look into it with you right now live. Let's just do it. Let's do it live. We'll go live. And we'll use Seeking Alpha, everybody. Let me make this a little bigger. BDVG. Let's see what you got cooking here. The Berkshire Dividend Growth ETF. That's interesting because Berkshire doesn't pay a dividend, right? So this is Littman Gregory Funds Trust. Right off the bat, 0.55% expense ratio. So for every $10,000 invested into this, you're paying $55. Or for every $1,000, that would be what? $5.50. Math. I'm not very good at it. So take that with a grain of salt. But how does this make money? The fund is co-managed by Berkshire Asset Management. It invests in public equity markets of the United States. So it invests in stocks of companies operating across diversified sectors. And it hasn't done that hot. How old is this? Oh, it's new. This guy's not even 6 months old. June 30th is when it first started trading. So it is up 0.34% in the last month. Oh, dude, what? Only 1 million of assets under management? That is small. Volume, only 1,320. I don't know, man. So far, this is showing me a few. Let's see, technology. What do we got? Top 10 holdings. Currently does not pay a dividend. That could be because they haven't paid their first one yet. But Chevron, Nucor, Microsoft, JP Morgan, Apple, Lockheed, Bank of America. So Norfolk Southern. So they're investing in all publicly traded companies. And 36 holdings. You know what, man? I don't know. I really don't know enough about this. And I guess we would have to dig into it. But it seeks dividend income and long-term capital. So it sounds like it's trying to be kind of like just like another dividend ETF. But that's crazy, though. This right here, this assets under management, 1 million. What is that? Not 200,000. 1,002,000. Is that just a shade over $1 million? That's nothing, man. So I don't know. I would be skeptical and invest 80%, at least 80% of its assets plus borrowings. Does anybody have an opinion on BDVG? Share it with me now, because up until this moment, I had never looked into it. That's so there you go. Hopefully that helped you. I would rather just stick with the tried and true. Maybe like VIG if you want some capital appreciation and dividend or more exposure to the, I believe, tech, right, is VIG, and SCHD. I would just stick to those. Let's see. We said it again. Let's see. Travis, what's going on, Travis? I'll give you a salute too. Don't listen to the YouTube tricksters telling you to buy lousy stocks. Who's a YouTube trickster, Shamir? Who you calling a trickster? Yeah, always do your due diligence. Hey, as we say, and I should say this more, like, just because I buy something, please, nobody ever don't just buy or sell something because I did. All that I'm doing here is trying to share my journey, my evolution of sorts, trying to be the whole thing I do here is I'm trying to buy stock and get income without having to sell the shares. That's kind of the whole goal. Now, yes, I've been down on things. I've sold things. I've made some shifting, but hey, I'm learning and growing as a human being. So that The death spiral with MPW. Michael Schwami. Oh no, that stinks if I'm freezing. I don't know. I hope not. I got my phone over here. I'll keep an eye on it, see if I do that. Oof, you're underwater. I feel for you. So you have 400 MPW at 1321. If those are in a taxable account, just a thought, you could always tax less harvest. Can't buy it for 30 days. Maybe it drops more and you get back in. I don't know. That's interesting. Or we just keep our fingers crossed and pray to God that they don't. Yeah, that's fun. When in doubt, get out. Should have done that with a few others. Good to hear. Steve, I'm unfortunate that your computer's having problems, but I'm thankful to hear it's not mine. As people on this end, when you're broadcasting out, it's like, is it me? All right, here we go. I wanted to know about BDVG. Yeah, BDVG. Berkshire Dividend Growth is what that stands for. Oh, by the way, on the Invest Talk podcast, I had heard Justin Klein call SCHD Schwab D. I was like, oh yeah, because isn't Schwab SCHW? So I don't know if that's right. I'd heard somebody say once SCHD was Schwab High Dividend, SCHD, but now I heard him say Schwab D, which I called it during that in my live, or the little short I threw out at you guys. I threw it out. All skeptical of new ETFs. Well, yes, at one time, SCHD was a new ETF. All just like every large cap, mega cap stock was a micro cap stock at one time, right? Yeah, good point, man. Too early for an opinion. I would stick with it, but BD live chat. Nah, man. Jeff, I don't know what's going on. That's got to be on your end. So on the live chat, I don't have any control over that's working. Do hold MPW in the Roth. Word to the wise, everybody that's watching out there, and I'd like to know your thoughts on this. But when you hold something in a Roth, like I have shares of AT&T, and when you hold an individual company inside of a tax advantaged account and they crater and they tank, you can't sell them for the tax loss harvest and use that to offset your capital gains and put it in something completely different. As we like to say, you don't have to make your money back the same way you lost it. But I almost think it's probably more advantageous. Well, I got to think about this, because if you hold an ETF inside of a tax advantaged account, the odds of an ETF going under are just nothing. So slim. It could take a hit and whatnot, but yeah, I don't know, man. I would, what do you guys think about that? Would you rather hold riskier stocks or individual stocks in a tax advantage? Because then if they go the wrong way and you didn't get out, you can sell them for a tax loss, All right. Yeah, how can they use a good name of Berkshire? If somebody didn't answer this, I don't know, but I'm assuming it said it was in partnership, right? With Berkshire. It is co-managed by Berkshire Asset Management. So I think Littman Gregory Funds Trust, I think they partnered with Berkshire Asset Management. But again, that's crazy that there's only 1 million of assets under management. I don't know. That's just really small. I don't know why that's so small. UGI. I thought we talked about UGI once. I think they're going to be fine. They get a pretty high dividend safety score, I think. I'll bring you with, and then I'll also give you, because I like you, I'm also going to give you the intrinsic valuation from alphaspread.com. What are you doing over there? Come over this way so all those people on the phones can see this bigger. Yeah, they get a 90 dividend safety score of 90. That yield, that's a little frightening. I don't know why. I haven't looked into this. On May 24th, they apparently got a downgrade from 99 to 90 because of propane headwinds. So it looks like there's been challenges in their non-regulated propane business. which is, I don't know, because that's from May. I don't know if that's abating yet, but yeah, 7%, 20-year CAGR. That's not anything to sneeze at. Yeah, look at that 35-year dividend growth streak, but they've paid uninterrupted dividends for 138 years. So regulated utilities, which they said that was the propane was the unregulated, right? Or yeah, they're non-regulated propane business. So that's one of the reasons why. But I'm sorry to do that too. Hope you don't get dizzy. Yeah, they're just consistent raises. That yield is what? That's 86% above the 5-year average, and their earnings payout ratio is more meaningful because their utility really low, 52%, and that's actually on the high end. So they still look okay. They've had sales has been cut off there. Sales been down a little bit. So yeah, I don't think they're actually buying back shares now. That's interesting. I wonder if they had an acquisition here when they jumped from 181 to 210. They might have done that to raise capital to buy something, I guess. But I don't know. Net debt. I don't know what that's all about, but obviously an aberration. Their net debt came down. So interesting. Interest is negative 1.39. Not very good. Interest cover. Anyway, and then we said it'll get you an intrinsic value. So they should be okay because I think most of their business is regulated utilities. Come on, Alpha Spread. You can do it. Hey, better late than never, right, folks? They get an intrinsic value of 48.68, so 49 bucks. And then worst case, 42, and they're currently at $24. So it may be a good time, good risk bet. Let me see if ownership's management. Yeah, it looks like we've had a buy. And it was by Roger Perot, their president and CEO, May 24th, 7,130 shares. But other than that, there's been a bunch of selling going on. So that's interesting. I don't know. Good one. I'd be okay buying them. I'm pretty sure they're in some of the funds I own, like a mutual fund or whatnot. Let's see. It's the hardest thing when you just have this thing you say, I want to know. I want to know. Jeppy all the way. Yeah. What do we got here? What do we got? Oh, AGNC, Grove Dwayne, and Armor Residential, ARR, right? I know that those are both mortgage REITs. I think both M REITs. That's the one sector I'm most uncertain of, and I haven't really done a ton of digging. So, all right. If you hold them in the Roth, you plan on never using the money, but passing it to your children. Yeah, good one. But hopefully they'll come back. Like I said, AT&T, we have it in the Roth. I haven't sold. I have the sunk cost fallacy going on hard with AT&T because I keep thinking end of the year, they're going to come back. They're going to be 19, 20 bucks a share. It's just a matter of time. And I might be wrong of that. But yeah, Caleb, you're thinking of buying more. My opinion is I want to get out just because it's when we look at the share, the total return for Verizon and AT&T, and I know I've done this several times, it's paltry compared to T-Mobile, which is in their sector, which doesn't pay a dividend. So I think when you have a highly capital intensive business in a highly competitive sector, paying a big dividend is a real drag on the business. And, I think T-Mobile, because they don't pay that dividend, that it's really giving them extra cushion to have better deals and do more flexibility to do some things that AT&T and Verizon can't right now because of those dividends. So honestly, it's a tough one, but I think I would just be happy having some exposure to Verizon and SCHD. And it's kind of something I've learned. This is one of the things I've shared with one of the live streams I've learned about AT&T and Verizon is, maybe I didn't know any better and I just bought them because they're big blue chips. You see Verizon Actually, that's kind of a thought right there, right? You see the Verizon stores, the AT&T stores. I'm always seeing the AT&T trucks. Well, guess what? That's a cost to the business to have those stores, to pay people to work in those stores, to pay the utilities on those stores, the fuel, all those trucks driving around repairing things. And it's again, it's a really, really capital intensive business and highly competitive. So I think they're always going to have this issue, and it's just inherent to their business. And, I would just, I don't know, if you want the income, maybe you just go with Jeppy instead of those and just suck it up, the 0.35% expense ratio, but that hopefully will keep appreciating. And does UTG, I think you mean UGI, but no, UTG, I don't know. I would assume they do. Let me know if anybody thinks so. Travis has been buying UGI. Yeah, I might look into that one a little more. That might be a nice high dividend yield play. And it's funny, I keep thinking that I think there's a 90% chance that the Fed is going to pause their rates on I think it's September 20th meeting that they're going to hold. And if they do that, and then when they eventually start cutting, right, because stocks and bonds are always competing with each other for investors' capital, and it's people looking for yield, like yield starved investors were putting lots of money into like REITs, like when Realty Income was north of $70 a share, things that were paying 4, 5, 6% even. But as soon as the interest rates started coming up and people were no longer penalized for saving money, then that just sucked so much capital away from the stock market, and particularly investments that people held for the yield, like all the REITs. Especially, I think that's why the REITs and the utilities got hit pretty hard and they've been pretty down, is because that was considered safer money, especially the utilities. It's the regulated utilities like UGI, Duke Energy, Southern Company, those companies that have the government's, it's almost like government sanctioned monopolies. And yeah, you may not get the capital appreciation, but their business model is almost guaranteed customers. And we all need electricity and energy. So I think that's kind of one of the things going on. So I can see whenever it is late next year, whenever they start cutting interest rates, then money's going to flow back into the stocks like REITs, and it's just going to start raising the REITs and the utility stocks. That's my little, guesstimation on that. I'd love to know if you think I'm wrong, whatever you, or hell, type whatever you want in the comments. It's your life. You can type whatever you want. I don't care. Tell me all about, I don't know, say Beetlejuice. I don't know why. Weird. So this is exactly, thank you for sharing that, Shamir. Some of the biggest gains come when you believe in something and everybody hates it. So the thing with MPW right now would be to figure out, see if you can crack the code and find out what the market is wrong about. What is everybody else wrong about or missing that you're not, or that you think is going to play into them recovering and going back up. VLO and TSN. Well, I don't want to spoil TSN. I'm doing something on TSN. VLO. I don't know VLO. How can I do this quick? Oh, it's Valero, right? Yeah, Valero Energy. John, buddy, it's your lucky day. I'm going to try and show it quick. Hey, Kevin, thank you, man. UGI is going to struggle to grow unless LPG prices rise. Good. Yeah, I haven't done any looking into the propane, LPG, any of that stuff. So that definitely would be something all y'all should look into. All right, I'm going to share this real quick with you, buddy, for Valero Energy. Valero, 2.93% yield. That yield's below the 5-year average. That's just not going to tell us anything about the future, but looks like they're froze that dividend, right? No year growth streak. Oh, it was frozen. They just started raising it. Okay, I see what's going on there. That was probably from COVID, right? Sorry if this makes you nervous. Oh no, they didn't cut during COVID. They just froze. That's interesting. That's kind of a good sign, I think. Let's see, forward PE in line. Yeah, that their average yield is usually 4.3%. So that's right. So what we're looking at here is, let me do this, dividend yield. When the share price goes up, the dividend yield is going to start to fall. So when the share price goes down, dividend yield will go up. And that's not always a good thing. It can be, but we usually want to see the dividend yield going up through the company raising it and not so much through the shares dropping and pushing that up. So it's kind of, anyway, point being, looks like the yield's lower because their share price just keeps going up. And yeah, free cash flow payout ratio, 21%. Nothing to worry about there. So they look a little solid. I have never really dug into Valero. Looks like their free cash flow's been dropping a bit, but still, I mean, what is that? $19.10 of free cash flow per share, and we're paying out $4.08. So yeah, it's not bad at all, man. Sales been dropping, and there we go. 375 million shares outstanding. A lot of share buyback going on, and let me just look at their debt. Really nice ROIC, very high. All right, where's your debt? Where's your debt? Oh, that's pretty cool. Look at that. Their net debt to capital has been dropping all the way down to 18%. That's pretty cool. So they're dumping tons of cash into buying back debt, buying back shares. I like to see that. And they just started raising the dividend. So, and then their leverage is less than 1. I mean, that's pretty solid, coming up a little bit, but yeah, interest. So debt really not looking like an issue at all based on what I see here from Simply Safe. And then I'm just going to throw out a number here for you on the valuation is, because I shut the screen off already. It is dun dun dun. Valero Energy, $186 on the base, 123 on the worst. So it's a little bit overvalued. Yes. So that's what's going on with that. Is EPD a pain due to the K1? I don't know because I hold it in the Roth. And from what I understand is you don't get a K1 because we haven't when it's in a tax advantaged account here in the United States and you receive less than 1,000. Kevin, you might be able to back me up on this. You receive less than $1,000 a year in dividends from that company, then you don't have to pay taxes on that. But the 1,000, and so the first penny after that 1,000, I believe you are paying your normal normal tax rate on, from what I understand, not on the 1,000, but on that first penny over $1,000, and you get a K1 even if it is in a tax advantaged account. Why? Because the government wants their money, and they're not going to let you get away with too much because a lot of the MLPs, the master limited partnerships, they get that K1 because they're just a pass-through entity. So what do we say? You're a partner. You're a partner in the business. And because you're a part owner of that business, then you're paying the taxes on that. So government's not going to let you get away and outsmart them on that one too much. So yeah, REIT best held in a Roth. I agree. I shifted all of my REITs into the tax advantaged accounts just because the dividends are taxed at your normal income tax rate. They're not qualified, so there's no kind of special tax advantage or tax break for that. So I had shifted all the REITs I had held into the tax advantaged accounts. You are welcome for digging into UGI. A PT, what am I not knowing what that is? A PT, oh, price target of 38. Whew, I'm feeling it, man. Like I said, it was a crazy night. My wife and I were out late. If you're from Wisconsin and you've been to Wolski's, they give you a sticker and it says, if you're there at last call, you get a sticker that says, I closed Wolski's. It's a thing that they say you have to earn. They never give it out. Way past this little dividend investor's bedtime. And I even had, when the craziness started, obviously I wasn't feeling so well this morning, mostly because I had poisoned myself and it was all self-inflicted poisoning. But I was a young gay gentleman. Even though I was with my wife, he was clearly intoxicated, way more than I was. And he kept buying me drinks, telling me I was beautiful. And can I buy you? And I was just like, hey, sure, man. I was like, I'll take your shot and the beer, but that's all that's going to happen. You know, he's like, you're beautiful. I want to buy you a drink. Fine thing, man. Buy me that drink, but that's as far as it's going. And yes, I did watch. I made sure he wasn't handing me nothing because I don't need to be roofied. And, I got a live stream to get and information to get to you people. I ain't got time to get roofied. So I'm somewhat smart. Okay. Now, TSN got kicked around. Yes. They are closing 4 poultry plants from what I've read. I'm going to do something on them. I got a video coming up. Daddy had to work and had family stuff going on this week. So the normal video is probably going to come out Wednesday. I'm going to touch, I put that out. I said, give me some stocks you'd like to talk about. I picked 3 of them. So I'm going to talk about them. Yeah. T and VZ, they do. Slayer. Saw a lot of Slayer shirts at Ghost last night in the old MKE, Cream City. And why do they call it Cream City? It's not because of the beer. It's because the quarry that they pulled their limestone or what out of to make the bricks for the buildings is cream colored. So there's a ton of old buildings that are cream colored. I don't know why that's going to be stuck in my head for the rest of my life, but it has. T's been paying down their debt and buying back shares. V hasn't. It's a lot. I know that they both have a lot of debt, and some of AT&T's debt, it's spread out all the way to 2097. I've shared that before, but it's still debt. It's still something that's going to have to be paid back. Interest has to be paid on the debt. And I've learned it's just better to hold a company that doesn't have a ton of debt. And if they do, then they should be able to pay it down easily if they want, like Apple. I know they took on debt because it was like free money. It's a trap. I loved Admiral Akbar as a kid. Kevin, you bought some more Mo. I did not this week. I bought a few shares last week as it was in the 43s. And yeah, that's an interesting business. We think they could be a melting ice cube, right? But like we say, dude, we're watching them evolve. We're watching them shift. Like they bought Enjoy, which isn't that like one of the first FDA approved vapes out there on the market or something? I should know more, but you know what, Jeff? Awesome. You got 4 shares. I picked up 2 or 3 or something like that. Oh, if you didn't catch the newsletter, sign up below. I shared everything I've bought every week, couple thoughts, and I bought more Hero Health. And like I said, this is something I'm not really going to talk too much about, but interestingly, because they have a lot of acquisitions going on and there's been people selling, a lot of weak hands. But I wanted to get up to 100 shares for that to be my growth play that doesn't pay a dividend. And I had Alibaba. So I've been rolling the Alibaba into Hero Health and a couple shares of SCHD. But as far as Alibaba, you know what? Let them go back up to the moon. I had bought them when Charlie Munger I don't really understand. They're just so expansive and vast and in China. And you know what? It's too hard pile, I think. All right, I'm getting caught up to you guys. So if I scrazed on by, did this guy just make up a word? Yes, he did just make up a word. You guys are talking. Oh, Pat. Hi, Pat. What's going on? Happy to have you here. Face orange biting nails. We got. All right. A long call strike for 30 protection. Okay. Hey, make a few bits of money if you want, or protect yourself. Playing with options. All right. I think I'm almost caught up to you guys. Fantastic. Can I do a video on qualified dividend stocks and non-qualified dividend stocks? How do you mean? Like which ones are qualified and not qualified? It's pretty simple. The non-qualified are usually the REITs and the master limited partnerships. And I think that's pretty much almost it. I mean, right? Chime in, chat. You people in the chat, get off your keisters and chime in because I'm thinking it's mostly just anything that's a REIT or a BDC, business development corporation company, same thing, right? Or anything that's an MLP. So I think like EPD is an MLP that's going to be non-qualified. And all that means, if it's non-qualified on the dividend income, you will pay tax on that, and it will be your ordinary income tax rate. Now, the trick is, if there are some people that, I think it's married filing jointly, if you have under $80,000 a year in earnings, then I don't believe you pay anything. So it would be 0% would be your tax rate. I believe so. Hey, Kevin, he's always popping in. You never know when he's sliding in the back door. He's slip, sliding in. Nice to see you, man. There you go. BDCs. Yeah, so it would be too many, dude. There's literally just thousands and thousands. And I don't. So let me share with this. Let me share. Oh, we didn't do news. Cripes. I'm going to share one thing with you, Mr. Caleb. Yeah, Frank, I love Main Street Capital too. Definitely want to see them back around 37 to buy more. But we didn't do a little bit of news. So I'm also going to show you on when we harness the power of Simply Safe Dividends. So right here, we're on VLO, right? Now, I know you have to have a subscription to see this, but they will show you right here, qualified. Here you go. Screenshot this. Qualified dividends are taxed at your long-term capital gains rate. So you have to hold the shares past 61 days. And they're always taxed lower. But then, so that's qualified. And if anybody, do you have a site that would be free that would show this quicker? What about Seeking Alpha? Do they? Let me see here. EPD. I don't even know. If we go to their dividends page, it should say. So all the summaries on Seeking Alpha should be free. So if we go to, I thought I saw it. 7 payout ratio growth, quarterly declare record amount. So it doesn't say it here. Am I missing something? Anybody? Bueller? Let's see. Let me look at these, see if I can get an answer. It's got to say it somewhere. Like, if not, somebody's got to get in touch with Simply Safe or Seeking Alpha. I'm not seeing it anywhere. It should say if the dividend is. It's got to say it somewhere. There's a few more tabs here. Hold on. I want to get this for you, Caleb, because then I don't have to make a video. You can just check for yourself, unless somebody's answered in the chat already. I'm surprised they don't have this. Like, this seems it would be a very simple. So these are all the ratios for EPD. I can't believe it doesn't say it anywhere. What is that? Oh, the payout ratio. Nice. This is surprising, chat. I would have thought it would be on. I'm not going to scroll down there. Now let me see this last one. Interesting. I am very surprised, Seeking Alpha, that you don't have if a dividend is qualified or not. So somebody tell me, where can you find that information at? I'd like to know, because knowing is half the battle. Yo, Joe. I know. Darn. No, that's all it would be, man. I mean, I pretty much just gave the whole information. That would be a short, actually, the difference between qualified and non-qualified. I mean, there's not a ton there, but I'd like to know if. Oh, are they? I didn't know that. Okay. Let me look. I'm looking right now because I'm pretty sure I thought that the BDCs were. I'm on Main Street. No, they're non-qualified. Yeah, here, I'll show you this. Michael. We don't want to be giving false information, Michael. I'm just kidding, man. So here, look at this is according to Simply Safe Dividends. Yeah, dividends paid by REITs and BDCs are mostly non-qualified and taxed as ordinary income. No K1 issued. Yeah, investors generally prefer to own shares in a tax-sheltered account to avoid the higher tax rate applied to non-qualified dividends. Yeah, so Main Street right here, non-qualified. And what's another BDC? How about Ares Capital? Love Ares Capital. Solid company. I love their CFO. Their CFO is, let me show you. I don't want to spoil it. Yeah, non-qualified for Aries Capital. Let's see. I hope this is going to be sharing. Let me do this. Sorry, guys. I want to share this with you for Aries Capital. Let me go here. Come on. Come on. Work with me. Work with me. Their CFO. You guys got to know the CFO's name for Aries Capital. It's just brilliant. If I clicked it, that would help. So we go here. One thing I love about Aries, check this out. By the way, there's their intrinsic value, $22. I just swear, $22. And the worst case, about fairly valued, $19.45. But we go to ownership and see, there's been some, but you hit transactions. Look at this. There's been 197 purchases and only 6 sells. That's pretty stout. And that is, ladies and germs, to quote Tim Ferriss, going all the way back to October of 2004, when 2 of those 6 sells were in that same month by a big share owner. So there have been very few sells on Aries Capital, which is one thing I love. When management gets the shares, they're holding the shares. But right here, let me blow it up. I'm gonna blow it up so you can read this. Pause it if you lunatics want. Penelope F. Roll is the CFO of Aries Capital. Penny Roll is the Chief Financial Officer. That has got to be one of my all-time favorite names for somebody working in the world of investing or in the world of business. And as far as that, John, with the Simply Safe scores, it's all done by their team. It's not an algorithm or anything. It is literally just what the crew, they manually review everything and give it a safety score. That's it. So we'd have to take it up with them. And I've disagreed with Nexstar Media. They have way enough cash flow to cover the dividend. So, man, I don't agree. It's like a 60 or something for Nexstar. I completely agree. To me, it would at least be 85, 90. So, but they got their reasonings, their seasonings and their reasonings. Non-qualified and ordinary. Is that what I was saying? Was I saying non-qualified and ordinary? I think you're right. Oops. Thank you. This is why we have people to get the assist. So thank you, Kevin. Non-qualified means you pay your ordinary income tax rate, but qualified dividends mean you get, the long-term capital gains rate, which is more favorable. And I think caps out at like 15% on the high end, right? So I do know what I'm talking about. I did say I'm 4 hours of sleep. I'm getting over self-inflicted poisoning, poisoned by my hand. But thank you, gentlemen and everybody. What? Some of the dividends in Main Street are qualified. How can that be some of them? I don't know, Frank the Tank, if not Frank. I'd have to look. I've never heard that. Not entirely sure. And again, thank you everybody for clearing that up. I can't believe I did that. How many people are like, this guy doesn't know what he's talking about. I'm out of here. People from Brooklyn. But yes. Oh, it's been a long day, everybody. What was that? They're like, why is it? I just have an itch all of a sudden. And you're like, he looks like a crackhead all of a sudden. He's just, you got any dividends? Is it Monday yet? Can I buy more dividends? Can I get more dividends? Oh, damn it, the news. Don't go away. Don't go away. We're going to do the news. I did not get the news for you guys from Simply. Oh, Jeremy's doing news you can use. Here we go. Go back to the top. And we hit latest. And we're going to go down to, when was Monday? I'm losing it. Monday was the 7th. So here we go, everybody. We go down to the 7th. Right here. Okay. Make it a little bit bigger. So I don't own TC Energy, but they spun off their oil business and they're keeping investors whole, which means that this is what AT&T did not do. They're splitting into 2 companies and the company that's splitting off is going to be paying a dividend. And when you combine the two companies, the dividend is about the same or more than when they split off. So they consider that no cut, keeping the dividend whole, kind of like what happened when Altria spun off, too big now. Skyworks, ticker SWKS, they hiked their dividend 9.7%. We're going to go through these quick, fly through them. Ingredion raised their dividend 9.9%, 3.16. They also used to be called Corn Products, which is interesting to me. Why? Because I used to work at a Corn Products in Summit, aka Scummit, Illinois. Broadridge raised their dividend 10%. You can go back a minute and pause these if you really want to read the little blurb. Raytheon had some issues with aircraft engines, so they think that's going to be fine for them. International Flavor got a dividend downgrade to 50. That's an interesting one. And then MPW. So there we go. That was a little bit of news that Simply Safe shared, and nothing crazy. So also I wanted to get to this one from you, Clifford, that SCHD and DGRO exclude non-qualified dividends like REITs. Now it all makes sense why there is no REITs exposure. What's an exposure? Anyway, woohoo. Oh yeah, dude. Thanks for hitting that thumbs up button. And I am wearing the Labatt shirt. Why? Because I just locked in a interview I'm going to be doing in a couple weeks. It may be way premature, but it'll be dropping the first Saturday or Friday in August, right? No, it's already August, nitwit. September, with Mike Haro, the Dividend guy. So excited to talk to him, meeting new people. I've never spoken with him live. So if you haven't, check out just Google the Dividend guy, French Canadian guy. So yeah, Shamir, showing some love for Canada. And Mike Haro reminds me of Martin Brodeur when I hear him speak. And he's a pretty cool guy. So that's what we've got cooking, moving, and shaking here on the channel. And for all of you guys and girls and ladies and whoever you call yourself, whatever your pronoun is, you do you. I don't care. I thank you so much for just contributing in the chat, spending a little bit of time. I'm going to take a break. I'm going to go sit on the couch for about an hour. And my daughter got us watching this Only Murders in the Building with Steve Martin and Martin Short. Kind of a fun little thing out there on Hulu. So yeah, we made it, and it's going to be another fun week. Kevin, buddy, thank you. We got to talk again live. It's been too long, and I love all you guys. Thank you for stopping by, and enjoy Pee-wee. God bless him. God rest his soul. Paul Rubens, we miss you, and this will always be forever in my heart and in my mind. I love the music from this, and that's why I play it from when I was a kid. So everybody, thank you for stopping by. I'll see you next week. So long, everybody.